up is AMC, and I just want to say this is a beautiful setup. I can't wait to get into this today. So we just broke down GameStop, and I have about 7 more that I'm going to break down today, so make sure to stay tuned for that. Alright, so let's go ahead and dive in. So pre-market, we're up almost 7%. Pre-market, okay? And yesterday we closed at 7%. So in total of 14 or almost 15% within 48 hours. Not bad, AMC, not bad. So I have my lines and graphs already set, so we're on the daily interval. This allows us to find our trend, our support and resistance lines, our exits, our targets, and all that good stuff that we need to further predict our analysis, okay? So this top line represents our major resistance line, and you can see over here we got rejected here and right here. Excuse me, bear with me, I'm still sick. And this candlestick over here. Now, if you look where we're at right now, we're testing this resistance right here, okay? And I'll get into that a little bit more in a second. So down here is our major support line. You can see that we bounced from over here, and right here. And then right here we were testing it, but we ultimately failed underneath. But yes, these are heavily tested areas, you guys, so we have to respect these lines. So as of right now, let me check the volume. The volume is at 996, so it's above the 150,000 that we like to see. That's beautiful. And we are on the RSI, I'm sorry, our trend line shows that we are in this upward trend, so we are above the trend line. RSI does look a little bit overextended, however. But yes, we are actually technically above this resistance, so technically we have a breakout over the pre-market. Let me go down to the 1 hour, but you guys can see how we're testing this resistance. We came up and kind of are now consolidating against this resistance because these are heavily tested areas. That's why I tell you guys we have to respect these lines, okay? And that's why we use them. So we go down to the 1 hour chart. You can see that we came up, pulled back 50% retracement back up into this resistance, which by the way is beautiful. When you have an upward trend, you want to be able to see at least a decent pullback. And then we pulled right up into this resistance, and then we're consolidating. This tight consolidation, or this bullish flag that we have right above this resistance. This is actually a beautiful buy setup for a breakout. If you knew how to read charts, you'd be able to clearly see that this is a beautiful breakout. But with us being already above the 1495, we're actually already above this breakout. I don't have the pre-market chart. It only shows me real time. Basically what I have is what I have. But it does show that we're at almost $15. So let me zoom out just a little bit so I can show you guys where that is on the chart. But that's right above here. So we technically broke way above that. So more than likely what we're gonna happen, or what we're gonna see, is that this gap up in the morning, right when the market opens at 9:30, or depending on where you're at, and we'll more than likely pull back down to this support line. Why? Because we want to be able to retest that support level. Once we can retest that, that'll show that buyers are in control, that we're retesting this support, and more than likely the reason for the pullback is just because we were up 15%, you guys. Even on the RSI, we look super overextended. So for us to gap up after moving 15% and then you know, continuing an upward trend, no, we want to be able to see this to actually cool off, take a 50% retracement, and then continue its upward trend, creating those higher lows, okay? So more than likely, yes, we would pull back down to the $20 area, or $14.20, around that area, maybe 14.10 cents. Anywhere in that area would be a good ideal entry. You just have your stop loss in the opposite side. Maybe have your stop loss at the 13.90 cent area, or the $14 area. That way you can give yourself some wiggle room. If we do break below that, we don't immediately get tagged out. We want to make sure that we're absolutely wrong if we get tagged out, and if we do, then we can wait for a better entry and you know, just basically be patient. But I don't think we'll break below that. Like I said, it's always possible. We always like to keep that in mind. But as of right now, yes, when the market opens, don't jump right in, you guys. Let's be patient. Let's wait for us to actually pull back, or figure out the actual direction that we're headed, okay? But more than likely, yes, we'll pull back down to this 14.19 area, or 14.15 area, okay, you guys? And that would make the ideal entry. So if we do come up, if we do pull back and we break below this 14.19 to 14.18 area and we start pulling back heavily, let's say we drop down to the $13.33 area, then we're more than likely going to start pulling back. And then the next ideal entry would be around the $12 area or the $11.90 area. But I won't get into that unless we do break below that, okay? So I hope this video helped you guys. I like to make these videos as fast and as efficient as possible. It allows me, if you guys could, please hit that like and subscribe button. It allows me to create this content Monday through Friday. But other than that, I hope you guys have a beautiful day and happy trading.